Good morning. It's Thursday, July 17th. I'm Phil Streible, Chief Market Strategist at Blue Line Futures. So let's briefly review yesterday's price action, crypto news, overnight price action, and what to watch out for in today's trading session. Now, my partner, Bill Baruch, he'll be on CNBC on the halftime show at 11 a.m. Central Time for the full hour block in studio in New York. So if you're interested in an active wealth management strategy, he does lead our sister company, Blue Line Capital, where we are rolling out a new program called Mining Alpha, which will own no more than 10 of our highest conviction names in the mining space. It can also raise up to 50% cash and more in extraordinary circumstances, but it tends to lean heavily into gold mining, but also will have exposure to silver, copper, and others. It's modeled similarly to our successful concentrated alpha program, which has capitalized heavily on the tech bull run since the bottom in 2022. Now, yesterday we did see midway through the trading session quite a bit of volatility here. We saw the dollar weaken substantially. Gold surged right up to the resistance point, getting up to that 33.65 on up, just a bit above there. Many traders that we're working with had been letting go some of those contracts up near that resistance point and adding on to any kind of material weakness here, as we believe that with CPI behind us, that some of the inflation gauges are starting to wind down. Now, that volatility here really had fueled on the speculation that President Donald Trump may soon fire Jerome Powell. We later observed that many of the intraday trends had reversed after President Trump downplayed some of these claims here. Now, the takeaway from that is that the trading action on Wednesday also suggests how Wall Street might respond if Trump were to remove Powell. So that's an idea that strategists could caution that it would destabilize the global markets here, and Trump's decision to fire Powell could undermine the stability of the United States. We believe that he was just doing what he is doing with the tariffs. Oftentimes he comes out with this hard stance and he tests the markets as he's done so with the tariffs, and then he reverses course here. So then you move on to the crypto market. Well, the House Republican leaders, they face challenges in resolving a deadlock with conservative hardliners over cryptocurrency legislation supported by President Donald Trump. The debate focused on a provision that would prevent the Federal Reserve from issuing digital currency as a broader crypto market structure bill. So these types of agendas here are going to be brought back to the table consistently. So we should see any kind of sell-off in some of these crypto spaces here be supported. That's why we'll be looking at some of these tactical resistance support levels for re-entries here on some of the cryptocurrencies and some of these outside commodity markets here. Now, not a specific recommendation. If you'd like to learn more about opening up a futures trading account with us, send an email to info@bluelinefutures.com. We also outline some of these key levels of support, like what we saw that resistance point in the gold market here yesterday. Also, the key level of support in many of these different commodities out here in the chart pack. And if you haven't done so, register for that as well. So looking at U.S. equities here, we are flat and the markets are a little bit calmer here on Wednesday as the drama and the fate of Chairman Jerome Powell gets put on the back burner. We're seeing stock futures just slightly higher, although dipping slightly in negative territory here after we had that positive outlook from Taiwan Semiconductor. That's TSMC. If you look on any of the television broadcasts or other news outlets, that's what that particular product is. It really boosted the NASDAQ here, and attention turns today to retail sales and a new batch of earnings. So the S&P 500 down about 3 points here, just right at that 6,300. Call that the pivot level here. 62.15 to about 20. Going to be some soft resistance, 63.30's key resistance. If you look at the daily chart on the S&P, we really got this breakout to the upside, and since then the last several days here have consolidated around, say, 62.50 on up to about that 63.30 level. So we're looking for some news flows and some direction here. If we get a breakout to the upside, 6,400 could be in the tables. A breakdown here could test that 62.75, below that 62.25, and then 61.75. So those are kind of some key levels. But the TSMC, they raised their outlook here, and that's a good sign that spending on AI is really holding up. Meanwhile, the retail sales data is going to provide some clues on how the tariffs are affecting demand for various goods here. The headline number was likely to be flat in June. That's what the expectations are after a 0.9% drop here in May due to the slower sales of of automotives in that particular sector. So you start to look at the outside markets here. You got the 10-year Treasury yield just up about 1 basis point at 446. We had some volatility yesterday. We expect 4.5 to be your resistance point, 4.42 going to be your key level of support. Many traders had come into the 10-year note looking at bullish call spreads going out past into the October contract, past when some of these interest rate cuts are set to be taking place here. Now, really, the July contract, I was looking at the CME's Fed Watch tool, completely off the table, but when you get into September, that's where you're getting about a 55% chance that they do cut about 25 basis points. You look at the volatility index, small spike up and surge here yesterday after that news headline came out, sitting at about 1938 here. So we're going to want to look at some of those key levels again on the tactical ranges here for clues. Is volatility really increasing? What bucket of volatility are we getting into? Are we coming out of the investable bucket, and are we getting into something that's much more greater? Remember, when you're looking at these markets, I oftentimes look at them as 3 different dimensions here. I'll look at the tide, where are these markets going? Then I look at the waves and the size of the waves, and then finally the ripples, and that's how your risk management trades, pruning some of these positions and adding positions, taking them on and off incrementally here. That's why you really want to define your minimum position size and your maximum position size. What position size would constitute some kind of day trade, some swing trade, and some longer term positioning here. And that's where the waves, the ripples, and the tides all come into place here. Now, we do have crude oil futures. They came down to a support level and then bounced back up here. We outlined that in the chart pack. There are some geopolitical headlines that are taking place in the Middle East here, not necessarily getting covered so much in Western media here at the moment, but there is a lot of developments and flows that are going on at the moment here. You do have the dollar index up significantly here at 98.44. We'll want to see where that's at. Is it just bouncing to another lower high? And then you have the euro currency coming back down to the 116 level. I believe that 115 is really anywhere in that range. Your critical level of support on the euro currency could mark an intra day, week, month bottom in the market, and then we could start push our way up. Many of the different financial analysts out here have about 120 as their long-term chart on there, which would start the next wave lower in the dollar index. As we reviewed, it's about a 56% inverse correlation between the dollar and the euro currency. Now, we do have earnings coming out here with a number of different companies, including Pepsi, and I'll get to Pepsi in a minute, Aerospace, GE Aerospace, Abbott, and then you have Netflix after the close. So the volatility of the NASDAQ will come with that Netflix after the close. Now, getting to the silver market here, because silver market, with all that volatility, all those fireworks, unchanged on the day essentially yesterday, slightly lower here today. And I know that you're all disappointed in the silver market not continuing its upward trajectory here, but to understand the dynamics of the silver market right now, I think you really have to know what's happening with copper, because remember, silver and copper, 54% of silver is industrial metal. Many of those applications overlay with copper applications. Much of the silver mining and the silver that is harvested here comes as a byproduct to copper mining. So when this is a message that I shared here with the Chicago team yesterday, is that obviously the U.S. is the second largest consumer of copper. It relies heavily on its imports here due to the limited smelting capacity we have and a low investment in new projects. Now, while there are 2 new recycling facilities that have been commissioned, they will only cover a small portion of those needs and of that copper shortfall. So we will need to be able to implement imports into the copper market. Now, ahead of the tariffs that were announced here and that August 1st deadline, we saw copper imports surge, but this is likely to slow down. So what's happening is much of the copper, they're playing this arbitrage strategy between the COMEX copper and the LME copper here at the moment. Now, we expect to see this import surge likely to slow down. What that'll do is that will push consumers to rely on the existing stockpiles of copper and potentially lower some of the COMEX prices here in the short term, because of the fact that we have this supply and we have decreased imports coming into the market. So what happens is that that push into copper into the future, securing some of the supply here, is really starting to go on the back burner. So prices are coming down to support. So if you look at copper, what's going on right now, you have this extension upwards, and then you have this kind of pennant that's going on right here. So what you want to do is you draw a downward sloping line here. And if you look at a breakout from here, what happens is we retest the top of that flagpole in the charts. And what that'll end up doing is where we see that strong demand coming in is going to be after August 1st, because we expect the return of increased power grid investment to really take place. If you look at the power grids, they were significantly stretched, especially in the Northeast here, where you had just record heat wave, record amount of electricity demand and things like that. These are going to have to be addressed in the United States, and that's where copper prices and copper and electricity really take hold. And silver is going to piggyback off of this type of flow here. So copper prices, they may face some short-term pressure as the inventories rise. However, I believe, and I could be wrong on this, is that any price weakness is expected to be temporary due to the solid long-term fundamentals here. So we believe that silver will extend a rally beyond $40 an ounce in the coming months. Again, could be wrong on it, and not a recommendation out to the public, just an observation that I have, and I project this observation to my coworkers as to what I am thinking in these particular markets. And this comes because of the growing tightness in the physical supplies and the growing investment demand that comes out here. So for short-term traders, also look at a 30-minute chart, and you can see there's an inverse head and shoulders pattern taking place, and it's a little bit more defined on the 60-minute chart here in the silver market. Now, one question remains is, are silver ETF flows a main driver? Because we were seeing massive flows here yesterday, with silver adding about 4.85 million troy ounces of their holdings yesterday, bringing that total net year's purchases to 58.8 million ounces. So that had a big jump up to 8.2% change here positively year to date. Now you look at gold, they added about 104,000 ounces. And what I really believe is happening is, again, is that I believe that gold will begin to benefit here from lower interest rates coming forward, and you'll start to look at that. It may not be the leader of the horse race here, but it could push itself up into the fifth, the fourth, the third place, potentially hitting some trifecta with silver and copper prices as well. Now, one commodity that we talked about yesterday was the sugar market. Take a look at a daily chart on that. You've got your big washout, you're hitting your low, you come back up, you consolidate sideways, and you break out to the upside. Well, what happened is that U.S. sugar consumption can rise about 4.4% to taking it to a right around 11 million metric tons annually if Coca-Cola does implement President Donald Trump's advice here to use cane sugar within the country. And that's something that has been pushed at in the background. This comes at a time where you've got global supplies of sugar hitting 14-year lows, one of the second lowest on record. And then you also have some of the demand picking up, the consumption picking up, the supplies are starting to come off a bit. You have India, which is hoarding some of it rather than exporting it because they only care about their inflation data and about themselves as well. So we're going to want to continue to monitor a lot of these different markets here. As far as, remember, it's not just one thing, it's not just silver or Bitcoin, it's everything. And you start to look at other things, like when you're looking at cryptocurrencies, you want to look at some of these bills, some of these proposals, you want to monitor some of these other companies like Robinhood, like Coinbase, like Circle, see what the price momentum is on that. Look at some of the smaller altcoins like Ripple, like Solana, like Ethereum, that are all starting to take off to the upside. Again, you trade silver, you look at copper, you look at the dollar, you look at yields, you look at industrial demand, you look at the Chinese economy, you look at a bunch of different things. It's not just there's manipulation and they're holding it down, or there's a squeeze going on. It's more than that. And remember, just broaden yourself out here. Look at the technicals, look at the fundamentals, and really build yourself out as a trader that is complete in nature with all these different things. So again, I'm Phil Streible, Chief Market Strategist at Blue Line Futures. Remember, futures and option trading, it absolutely does involve risk of loss, and it may not be suitable to all investors. Good luck, good trading, go get them.